All right, what's up? This is Ruth from TGE. And how would you like to how would you like to be able to forecast what is possible on any given security? ETF, equity, index. A lot of the stuff that we do inside TGE Max is being able to use tools that are forward looking, okay, to be able to predict what's going to happen. And in today's video, I want to talk about a tool that a lot of investors and also traders like to use called the Elliott wave and why it does not work. Okay. And so we have a little article right here and I want to go over it. I'm just going to put this over here, put myself over here. Okay. So the article goes, have you ever seen a chart with a bunch of squiggly lines and numbers labeled 1, 2, 3, 4, 5, A, B, C? Okay, this is literally it. Okay, that's Elliott wave theory. Some traders swear by it, but here's the truth: it doesn't really work, and here's why. Okay, uh, if you've seen the channel long enough, you know that I'm I'm not about using any past historical data. What happened to my face? Okay, I'm not about using past historical data. I'm about forward-looking metrics. So a lot of option flow reading, a lot of option premium reading, okay, the tape, things like that. Okay, that to me is much more valuable. Okay, and that's what we teach inside TGE Max. It's about implied volatility. What's the forecast, right? So, anyways, and the objective with the Elliott wave is to be able to forecast where things may go. Okay, but it never works. Okay, so what is the Elliott wave, right? Elliott wave is a method where traders try to predict, and even investors try to use this too. Try to predict the market by spotting repeating wave patterns. Okay, this is already a mistake when you think about this because it's repeating. You're looking for patterns. Like patterns, it's like us as humans, we like to see patterns, right? We like to be able to see common patterns because that to us is comfortable. But the truth is, price is always random. You don't know where price is going to go. And I'm going to show you a pretty good example of SPY here that I've been watching the market here for a bit. Let me see where SPY is. Okay, I'm going to show you an example. Okay, but the goal is to try and get close, like use math to be able to forecast the future. Elliott wave patterns depends on like historical data and all this stuff. And it tries to be a forecaster, but it does not work. It never works. The idea is 5 waves up, then 3 waves down, right? And then you repeat that forever. That's in theory the Elliott wave. And so the problem, so here it is, like 1, 2, I try to use ChatGPT for this. 1, 3, 4, 5, right? Whatever the case is. And then you got A, B, C, right? And typically they say C. The C wave is the hardest hitting wave because it's the longest and the fastest, supposedly. So I've heard. The problem is that the market isn't that simple, and it's very very complex. The market is very complex. That's why like hedge funds like Jane Street, Citadel, uh, probably like all the like it's just any quant firm doesn't look at the Elliott waves. They don't look at historical past like that. They're using quantitative forecasting models to be able to predict what future price can be, either to the upside or to the downside. Okay. Okay. So, and the problem with the Elliott wave, and I see it all the time, especially on Twitter and even on YouTube, everyone sees something different. Okay, one trader. This is the problem with technical analysis in general. It's a what do they call it? A full fulfilling prophecy, right? You're gonna see whatever you want to see. One trader says we're in wave 3. Another says we're in wave. No, that's wave B. And it's the same chart and just different opinions. It's too subjective. It's too subjective. There are no clear rules, and people often change their wave count after price moves. And I used to see this. There was a one tweet that I saw. They had like this we're in wave C, and then they had to readjust it. It's just It doesn't work. It's not a forecasting tool. It's like guessing the score of a game while it's happening and changing your guess every time the score updates. That's a pretty good example. Okay. So it only works in hindsight, right? Most of the time, I'm gonna go off script here a little bit. Most of the time, a lot of the traders that say, "Oh, this was just a classic Elliott wave," they sound smart after it happened, right? But when they try to use it during the real time of trading hours, it never works. They just look dumb. Elliott wave often makes sense after the move has already happened, but the real traders need forward signals, not storytelling after the fact. If your system only works when you're right in hindsight, it's not a system, it's a distraction. And I truly believe that, okay? And we see it a lot. Classic Elliott wave 1, 2, 3 pattern, but the move already happened. Okay, there's no way. Like in real time, you're doing this in real time. When we're going into a trade, it's real time. And when it doesn't work, then what? What are you going to do, right? So, what actually moves the market? Here's what real institutions care about. Anybody that wants to use like a real edge, you have to use option flow. Okay, option flow is not just like seeing what big orders are coming in and this and that. It's being able to read like the tape. Okay, it's being able to see this was a sell, this was a buy, this is a very aggressive buy, this is a very aggressive sell, and seeing patterns within there, within like the expiration dates, strikes. Is it out of the? What's the moneyness like? Is it out of the money, in the money, at the money? At what spot price? Is there a common pattern in spot price? Right? Like you want to see this tape that's coming in real time and then find patterns during that moment, right? So that's one thing. Two, dealer position. So Gextron has something called delta hedging and sorry, delta exposure, right? And it's you want to find out like how much do market makers have to hedge their risk based on how much delta exposure they have. Okay, market makers have a huge influence in the market in the underlying security. They also buy and they also sell the security to hedge their own portfolio. They're actually not directionally biased. They make money off the spread between the bid and the ask. Okay, and so they're kind of neutral. They just want to. They're just like neutral. They rather stay flat, right? And so when things start going against them, then they have to hedge. That's a much better edge and much better strategy than using the Elliott wave. All right, because then you can find out where is are they going to buy and where are they going to sell. Right, support and resistance for you as a trader. Hedging pressure, when the market makers are forced to buy or sell the stock due to option movements, right? So again, like what affects delta, gamma, theta, implied volatility. Um, what else? Probably some other factors as well too that I can't name off the top of my head, but you get the point, right? The option Greeks is literally the pricing model of the option, right? And and that's going to affect delta, and then the delta is going to affect how market makers behave. And so if you can figure that out, you have a much better edge, right? Now we know this in concept and in theory, right? But we don't put it into practice. Like we let our tool do that for us. So that's what Gextron is for, trying to figure out where are the key levels and all that stuff, right? We don't have to figure that out, but it's good to know though. So okay, that's what causes real moves, not pattern pressures, right? And so this is where Gextron answers, right? If you want to trade using real data, not theories, this is where Gextron comes in handy. So Gextron helps you see the hidden forces behind price movement. So this is like gamma exposure. It shows you how much options are stacked each other, like based on strike, and where price wants to get pinned, right? Based on where's the tallest bar, where's the tallest negative bar, and then also how much delta exposure. It shows you how much dealers need to buy or sell depending on as price moves. And then also being able to forecast, right? So we have something to inside here, inside Gestron called expected move. Okay, so we go into this little column, and right here you'll see this column called EM. You'll see numbers here all throughout every expiration. And what Gextron is telling you is it's forecasting what this given security is possible by a specific date as of right now. The current price and the current option premiums, we're saying by May 16th, by tomorrow, because today's May 15th, it has about $12.83 move left to the upside and to the downside, right? It takes into consideration theta, it takes into consideration implied volatility. Okay, these are things that matter when you're trying to forecast what's possible for a security. Okay, so there's that. Instead of guessing where a wave might end, Gextron shows you where pressure is building and in real time, right? And here, let me show you actually the option flow tape. This is for Tesla, right? So when we're looking at Tesla here, we're seeing a lot of puts coming in, lots and lots of puts. But also reading this tape says, okay, yes, it's very put dominated as of right now, right? But this is neutral. Okay, so this is kind of like a neutral. It got the fill got in the bid in between the bid and the ask. Okay, let's look down a little bit more. Okay, this was an aggressive sell put. You see the green highlighted background. So this is a bullish sentiment, right? Very aggressive sell of the put. Anybody getting rid of a put is a good thing. Okay, they're buying a call. 420 call. This is a very aggressive buy at $1.25 million. Okay, so being able to read these kind of tapes is really, really helpful. Okay. And then you could see this also, like you could filter. This is like the actual option tape. This was just unusual options. And then I have my filters here for Tesla. But this is a real tape on option. This is every single order coming in for Tesla. So you have to look at all these things, all of these measures, and then you gotta look at this, and then you gotta look at this. Okay? This gives you a much better prediction of future price than the Elliott way. It's a little bit more complicated, but once you figure it out, it's really easy. Like you feel like you're in the matrix. All right. So the bottom line is the Elliott wave is fun to draw, but unreliable for real trading. If you want an edge, follow what moves the markets: flow, positioning, pressure, and of course, Gastron gives you all three of those things. So trade smarter, use data, and leave the waves to the ocean. You know, it's cringy kind of saying that, but it sounded pretty good at the time. Okay, so that's it, right? And just to give you another example here, let me show you here. Okay, this is real time, so I'm gonna dissect Tesla for you right now. Okay, this is very, very important. So you can kind of see how Gextron works, right? Now we know inside TG Max, we know how to use. We understand the mechanics and how it works, and we understand the math. Okay, because there is math involved in this, but trying to do the math manually, good luck. That's a lot of work. And by the time that you're finished, you're probably done with it. But this Gextron does it all for us already, right? So like one of the things that we do here when we look at Gextron is like where are the support resistance lines. As a trader, as a retail trader, you're going to be like, I want to just know where support and resistance is, the daily key levels, and then I want to just trade off of those zones. That's perfectly fine. Okay, very simple. So at the moment, we just look for like the tall bars, whether they're positive or negative. Really easy, right? You just go to Gextron and you're like, where's the tall bars? Also, before I show you that, there's a gamma profile chart. So this kind of lets us know that Tesla is very, very bullish because it's above zero. Okay, so that's good. We're very, very bullish on Tesla as of right now. The data changes. So Gextron will update as the day goes by, depending on how the option flow market is positioning itself. Okay, so we right now we have 350 and we have 330. So we just mark those levels, and we also kind of have here 340 and a little bit of 345. So we're gonna mark those levels, right? You see that here: 330, 340, 345, and 350. Okay, and the next thing that I want to do is now look at the option flow tape. There is some deep in the money puts, right? Because Tesla right now is at 338, and these are really deep in the money. 800 puts, right? Okay, 218. It's about a little bit close to a year. December contracts. Okay, now how do I analyze this chart? How do I make a decision to jump into a trade? Well, this could be done very easily. One thing to note that we want to figure out too is where is P-trends? P-trends is the one level that tells us, okay, this is the last line of support or the first line of support, that if we are above this level, then we're in a bullish sentiment still. Okay, And so at that moment, it has to be the first positive bar, and the rest have to, all the higher strikes have to be positive. So you can see here it's 317.5. Okay, so I'm gonna mark that level real quick. So you can see this 317.5. I'm gonna label this as P-trans. Okay, so I know that as long as we're above P-trans, we're pretty much bullish. But our objective as traders is to be able to play level to level. Okay, so I know even though we're bullish, we want to play level to level. Okay, so in this case, and this is what we've been doing with Tesla. If you look at in some of the past Tesla videos or any of the other videos, I think I break down Tesla, and we're just playing level to level. So right now we're at this 345, and price is struggling. So if I wanted to take it down, there's a couple ways to play this. At the moment, if it's struggling to stay above 340, then potentially I want to take a put or downside trade to take it all the way to 330, because that's the next key level. Okay, if it is above 340, then we can take it to 345, just like we saw the tall bar, right? These are just tall bars that we saw here. Then if it stays above 345, then maybe we can take it to 350. And it's just that simple, right? If it rejects 350, if it cannot, then take it to the 345. Level to level. That's it. That is literally going to be your entries and your exits. Okay? Now, that's one way to do like exits. The next thing that I want to cover here is being able to forecast, because I talked about it earlier. I said, how do you know where price can go by a specific week? Okay, where can it go to by a given expiration date? Okay, so let me break this down. Every Monday, I look at, I have my list of favorite stocks on Monday, at least like either before open or if the market kind of gaps up, I will recalculate the first 15 minutes. I just go to this calendar tab and I get the weekly expected move. Okay. And so I get the Friday expiration. In this case, Tesla is going to be May 16th. And I get this number. This number was bigger. And I believe I marked it here actually. So it was about this might have been on Tuesday actually, Monday or Tuesday. It was about $15.80. Okay, where was this? So I must have marked this a lot later because I didn't do it right. So this was Friday. Monday was here. Monday. Okay, so when did I trade Tesla? It must have been on Wednesday. I might have updated the numbers here on Wednesday then. Okay, so let's say Wednesday, which was yesterday. There was $15.80 move left on Tesla as of Wednesday, right? And yeah, so it looked like it was Wednesday. So then I grabbed this number and I added to the spot price when this snapshot got taken. And then I marked the levels. Here. It says WEM and WEM. And I like to put parentheses and put the number of how much the expected move is when I got these calculations. And you can see here, since Wednesday, right? Now the move is about to hit the WEM line right here. This is better done first thing Monday morning, at least at the latest, Monday morning. That gives you better because then you have as the week goes by, implied volatility skews the data, theta skews the data, so it's just better to get it fresh, latest Monday morning, okay? And then now this tells me, okay, look, you can see here that we are hitting almost this weekly expected bottom. It doesn't have to tap into it right there, but it's close enough, right? So if I want to take calls, this could be a good area to get calls. And the way I would trade this is that now you got to look at volume. Is volume reacting as a supportive zone? As if price bounces here, is volume rising, right? And so that if it does, awesome. Get in the trade, aim for 340, and if it could go hold 340, go for 345. It's that easy, But you can see here that since Wednesday, since I marked the expected move, we almost tapped into the bottom weekly expected move, at least what was remaining of it, right? So if I wanted to trade Wednesday, I say, okay, I'm bearish. Now I know what's remaining. 332. Let's go for 332. I'll get a couple weeks out, get a strike that's 332 for Tesla, and that's your target, right? Or if you're biased to the upside, if you can figure out if your thesis is bullish, then just aim for 363, right? Get a few weeks out. Give it some time so you can trade it all the way to 363. Okay, it's that simple. All right, so that's the tools that you should be using. That's how you look for forward looking. That's how you know where price is possible of going. Okay, and that's how you use Gextron to figure out the daily key levels and how to get the expected move. Okay, and then how to read the option flow as well to make sure that it's in your favor. And if you spot anything that's unusual, of course you take note of that, right? And so the Elliott wave does not work. Should you use it? Absolutely not. Use forward-looking tools like Gextron. There's a 7-day free trial, so if you want to try that out, I'll put a link in the description. If you want to trade within our Telegram channel or anything like that, I'll put some more links in the description box, and I'll put this article in the link as well in the description box as well too. And if you have any questions, again, comment down below, ask down below, and I'll get back to you. All right, peace out.